In this video, I'm going to cover how to trade candle 3. By the end of this video, you will know exactly how to actually identify and trade this setup. Let's get into it. Now, the main thing you need to understand is wick size and how it affects expansion. We want to be trading expansion candles, and expansion candles typically have small wicks. A small wick tells us that price did not spend much time moving in the opposite direction. Instead, it moved in one direction with conviction. For example, if price opens, forms a small wick to the downside, and then gives a strong one-sided directional move, that is, an expansion candle. That structure supports continuation because most of the candle's range was used moving in one direction, not fighting both sides. Now compare that to a reversal candle with a large wick. In that case, price opens, makes a strong opposing run first, forms a large wick, and then comes back toward the opening price before closing. That kind of structure does not support expansion because a large portion of the available range was already used forming that wick. So when we are trading candle 3, especially in a 3-candle sequence, the idea is to trade following reversal candles that support expansion. We want the reversal to be clean with a small opposing wick so that candle 3 has room to expand and trend. The entire concept comes down to this. Small wick supports expansion, large wick limits expansion. And when you understand that, you start filtering out low probability setups and only taking the ones that actually have room to move. So here you can see the difference clearly. If we have a small wick, that is when we can consider trading candle 2, especially if it is supported by a change in the state of delivery on the lower time frame. The small wick tells us price has not consumed much of its range in the opposite direction, so there is still room for expansion within that same candle. But when we have a large wick like this, it changes everything. Once that candle closes back inside the range of the previous candle and leaves behind a large wick, that does not support expansion during that specific time frame. Too much of the available range was already used forming that wick. So instead of forcing an entry on candle 2, we wait. We allow that candle to fully close. Then we shift our focus to the next candle, which would be candle 3. At the open of candle 3, if the structure aligns and we get the proper lower time frame confirmation, that is when we look to get on side with the expansion lower. That way we are trading the candle that actually has room to move, rather than trying to force expansion out of a candle that already exhausted part of its range. So what does this actually look like on the lower time frames? When we have that large wick on the higher time frame, it tells us expansion is not happening within that candle. Why? Because price is not trending cleanly in one direction. It opens, makes a strong opposing run, then comes back and closes relatively near its opening price. That is not expansion. That is rejection and rotation. So the first thing I look for from that high is a change in the state of delivery on the lower time frame. If I get that shift, it confirms that candle 2 has indeed reversed. That gives me the narrative that the wick has likely formed on the higher time frame. Now, instead of forcing a trade inside candle 2, I look to position for continuation in candle 3. How do I do that? Inside that lower time frame structure, I can use any entry model I prefer. But ideally, I want to let the wick fully form first and then trade the body lower. Personally, I look for continuation order blocks. What that looks like is price opens, sweeps into a point of interest or takes a high, forms an opposing candle structure, confirming that the wick is complete on the higher time frame, and then gives me a clean continuation setup. That continuation is what I want to capture. So just to simplify everything, if candle 2 forms with a small wick, I can trade candle 2 because it supports expansion lower. If candle 2 forms with a large wick or a large opposing run from its opening price, I let it close. I do not force the trade. Then I look to trade candle 3 because candle 2 already used a large portion of its available range. If you look closely, candle 2 and candle 3 often move similar distances. The difference is how that movement is structured. In candle 2 with a large wick, price spends half the time going up and half going down. In candle 3, it becomes a one-sided move. That one-sided move is what we are trying to capture. And one more important point. We are not really looking to trade candle 3 when candle 2 is already a clean expansion candle. That is when we can get caught in a new phase of price. So now let's hop into a few examples in TradingView so you can see exactly how this plays out in live charts. So here we are with our first example on Euro on the daily chart. If you look closely, we first have expansion down taking out previous lows. After that, we get expansion in the opposite direction, which acts as a reversal. Then price retraces back into a fair value gap. Now notice something important. This daily candle is a reversal candle. Price has not expanded yet within this current day. It is simply reversed. Compare that to the expansion candle below. In that case, we had a candle 2 closure and price expanded strongly. That kind of expansion can often lead into consolidation because price already used a lot of range. But here, since we have expansion into consolidation and then a reversal type daily candle, I am looking for expansion higher on the next day. That next day becomes candle 3 in the daily swing sequence. So now we drop down to the 1 hour time frame to look for continuation. On the 1 hour, we are now looking to trade candle 3, meaning we are anticipating continuation in the direction of the daily reversal. You can see price reaches into a fair value gap. That becomes our point of interest. From there, we want to see continuation. As price develops, we notice it fails to close above that level initially. That tells us we likely need a new low to form a protected swing before continuation. So we mark out the new low and identify the series of down close candles that created that low. Now we wait for a close above that series of down close candles. Once we get that close, we now have a change in state of delivery. That confirms the low is protected. At the same time, we also have a small inverse fair value gap form on the 1 hour. Now the plan is clear. We shift down to the 15-minute time frame and wait for price to retrace toward that 1 hour inverse fair value gap. Ideally, we also want to see some liquidity taken on the lower time frame before entry. As price develops, you can see it forms a low inside the inverse fair value gap. We wait for that low to get swept. Moving forward, we get the sell-side liquidity sweep. Now we drop down to the 1-minute time frame for precision entry. On the 1 minute, we get a change in state of delivery and a small fair value gap forming in discount. That becomes our entry model. I enter at that fair value gap, place my stop below the low that was swept, and target the highs above. You could also hold this trade targeting the full daily candle expansion, but for this example, I am only targeting the nearby highs. As price continues, you can see it expands cleanly into those highs. And if you look back at the daily chart, you can see that the daily candle also played out in our favor, confirming the candle 3 continuation concept. This is how you align higher time frame reversal with lower time frame continuation to capture expansion on candle 3. All right, so that's how you align the daily reversal with lower time frame continuation to capture candle 3 expansion. You frame it on the higher time frame, wait for the reversal structure, confirm the protected swing, then drill down for precision entries. No guessing, no random trades. Everything is built top down. If candle 2 is a reversal with room for expansion, you position for candle 3. If the structure does not support expansion, you wait. Patience is what makes this model work. If this made sense, make sure you like the video, subscribe to the channel, and share it with someone who needs to understand candle sequencing properly. If you want to connect with me, join my Telegram and Discord. Links are in the description. And if you want to learn personally from me, check out the mentorship link below. I will see you in the next one.